Now, biotech is a notoriously risky business where if you have one
It is.
clinical trial failure, it can wipe billions off your stock in a couple of seconds.
Yes.
Given that risky nature of the business, why have they made for such great tenants over the years?
Well, that was our thesis in forming the company back in 1994 when we started this company. We started just with a business plan, a financial model, and kind of a hope that our $19 million we raised from friends and family would someday maybe create a little company that could own a few buildings. We never quite imagined what it is today. But the thesis was there are 10,000 diseases known to mankind today, and only 500 of which have been addressed in some fashion, whether it be treatments or cures. So if you think about that, 5% of diseases have been really addressed and the rest have not. How do you manage a country, a world population without making much greater inroads? And our thesis has always been the biology revolution is really in the very early days and very early stages. And back in 1994, it was almost in its infancy. That this would be a worthwhile industry to watch.
Cambridge, before you were here,
Yes.
It was a lot of parking lots, kind of drab office buildings. There wasn't a lot going on. So what made you think back in 2006 that you wanted to invest?
Novartis, I think it was 2003, made an announcement that they had decided was going to transfer worldwide research headquarters, and this is a Swiss company, from Basel, Switzerland to Cambridge. So that kind of informed us that we should take an ever-increasing bigger stake in the Cambridge market. No one ever imagined what it is today.
Take me back to 2006, after you purchased this lot. How easy was it to fill with biotechs and pharmaceutical tenants?
We saw an opportunity to do high-intensity labs there and create rents from lower office rents to much higher laboratory rents because of the infrastructure. We never imagined, by the way, that rents in Cambridge would begin to climb at a rate that they did over the next couple of years.
I want to ask you about that because this was really shocking for me that last quarter, of all the major U.S. real estate markets, Cambridge has the lowest vacancy rate of about 3.6%.
Probably less than that.
The highest asking rents per square foot for a commercial space of about $85 a square foot. It's seen the greatest growth of any major U.S. real estate market. What's driving that?
On the laboratory side, which is really our focus, the market is some 12 plus million square feet, and the vacancy rate for lab is actually probably closer to something maybe around rounded about 1%, maybe more or less.
Really?
Rents have continued to climb over the years in a pretty healthy pace. And the reason is because this is a very, very dense and concentrated area. There's not a lot of excess land, and there aren't a lot of buildings you could just tear down or convert. So the supply, good markets are driven by high demand and limited supply and a healthy industry. So you now have not only the life science industry, you have the institutional side, you have the commercial side, but now you have an influx of pretty deep-pocketed technology companies who have, in some cases, bid up the rents here as well.
You have buildings and research hubs around the country.
We do.
Active sites in San Francisco, San Diego, the Research Triangle. But I think it would be surprising for a lot of people to learn that Boston's your biggest market.
It is. Our footprint is about 38% of our revenue comes from what we call the greater Boston region.
What are the big growth markets for you outside of Boston and San Francisco?
So Seattle, we think, is a tremendous market. We think San Diego's had nice growth. We're also eyeing really creating a new hub in the Los Angeles area. New York City has been one of our crown jewels. I think that's certainly a growing market. We just bought one of the Pfizer headquarter buildings, and when they move out in about 6 or 7 years, we'll convert that to a multi-tenant lab building.
Is the idea in New York to create a model much like we have here in Boston, where there's great research coming out of Columbia, NYU, and turning that research into viable companies?
The market in New York it's 8 years into a 25-year gestation process, like this market has already been through the 25 years of growth. New York is still in the first decade, but New York's real throughput is early stage. You aren't going to have a lot of big companies moving big research units into New York. What you do have, though, is a wealth of institutions and universities who have a great amount of intellectual property that can be transferred and commercialized. And so we think the early stage market is where New York will shine.
Alexandria also has an active venture arm where you invest in biotech, some of them your tenant.
One of our early investments was Google. We invested in their Series A in 1998 when they just came out of Stanford. We still hold some of that stock today. That's been our best return on investment.
What's the return on Google?
We don't isolate individual companies, but the return, if you could imagine $1, today Google, I don't even remember what it sits at, but the numbers are probably, the return is probably 800, 1,000 to 1. You just generally wouldn't find that in a normal biotech company. So that's kind of an outlier, but we're still very proud of that relationship, and we still actually own and lease to Google their original campus in Mountain View.
I was going to ask you that you were an early landlord of Google as well.
We didn't know what Google was. I'd never heard of it. I had no ability to Google and find out what it was. And after doing diligence, came to the belief that this was an interesting company that may or may not make it, but it was worth it going ahead and leasing and maybe taking an equity investment. We didn't trade rent for stock. We made a cash investment in their Series A at $1 a share.